BlackRock, the financial colossus that moves markets like pieces on a chessboard. The largest asset manager on Earth, controlling more than $10 trillion, yes, trillion with a T. They hold stakes in Apple, Microsoft, Amazon, and hundreds of the world's biggest corporations. Their influence isn't just measured in money, it's measured in power. When BlackRock shifts its strategy, entire economies feel the ripple effect. Ripple, a blockchain innovator with a bold mission: to make moving money across the world as seamless as sending a text message. Powered by the XRP ledger, it's one of the fastest and cheapest payment networks ever built. Ripple has secured partnerships with major banks, payment providers, and even governments. But it's also been at the center of one of the most watched regulatory battles in crypto history, a fight that could redefine how digital assets are treated in the US and beyond. At first glance, these two players live in different universes. BlackRock is the old guard, the suit-and-tie titan of Wall Street. Ripple is the new wave, the blockchain insurgent rewriting the rules of finance. One commands the status quo, the other challenges it. But what if these worlds aren't as separate as they seem? What if the biggest name in traditional finance and one of crypto's most ambitious companies are already moving toward the same goal? What if the line between Wall Street and blockchain is starting to blur, and the bridge connecting them is being built quietly, far from public view? Today, we're going to peel back those layers. We'll look at where their paths intersect, the potential strategies behind it, and the ripple effects, pun intended, that could reshape global finance. Because if BlackRock is even dipping a toe into Ripple's waters, this isn't just a story about two companies. It's a story about where the entire financial system might be heading next. So stick around, because by the end of this video, you won't just understand the connection, you'll know exactly why it could be one of the most important moves in the history of money. And if you want more deep dives that connect the dots between the giants of Wall Street and the disruptors of crypto, make sure you subscribe and hit the notification bell, because the next one we uncover might be even bigger. BlackRock, the quiet kingmaker. To understand why a potential connection between BlackRock and Ripple could be game-changing, you first need to grasp what BlackRock really is. BlackRock isn't just an investment firm. It's the largest asset manager in history, with more money under management than the GDP of most countries combined. We're talking over $10 trillion spread across equities, bonds, real estate, commodities, and alternative assets. And that's just the portfolio they manage. The real influence comes from what they control. Their investment arms hold significant stakes in thousands of companies, from tech titans like Apple and Microsoft to energy giants, to the financial institutions that run the global banking system. If you've got a retirement account, there's a decent chance BlackRock has their hands on it. And they don't just invest, they influence corporate policies, voting rights, and sometimes even strategic direction. Then there's their crown jewel, Aladdin, an AI-driven risk analysis and trading system used by not just BlackRock, but also by major banks, governments, and corporations worldwide. Aladdin processes massive amounts of data, spotting risks and opportunities across global markets with chilling precision. It's not just a tool, it's the nerve center of modern finance. This level of reach means BlackRock doesn't need to own a company outright to influence it. They can tilt markets simply by changing allocations, moving funds, or signaling interest in a sector. A single public statement from their CEO, Larry Fink, about a new trend, whether it's green energy, emerging markets, or yes, even cryptocurrency, can trigger billions of dollars in capital flow within days. So if BlackRock's gaze turns toward Ripple, XRP, or blockchain technology in general, it's not just a minor endorsement. It's a market signal that could cause a cascade of adoption across the financial world. And that's why, before we even touch Ripple's side of this story, we need to understand, when BlackRock moves, they don't just play the game, they change it. Then Ripple, the challenger with a global vision. If BlackRock is the embodiment of established financial power, Ripple is the symbol of what's next. And to understand why they might ever cross paths, we need to unpack Ripple's mission, the engine behind it, and the growing influence it already wields in the payments world. Ripple isn't just another blockchain project chasing hype cycles. From the beginning, its goal has been razor-focused: replace the slow, expensive, and outdated infrastructure that moves money across borders. The current system, built on decades-old technology like SWIFT, takes days to settle a transaction, charges high fees, and often leaves smaller banks and individuals locked out. Ripple's vision? To move any currency, anywhere in the world, in seconds, for pennies with complete transparency. At the heart of this vision is the XRP ledger, a purpose-built blockchain optimized for speed and efficiency. It doesn't rely on energy-hungry mining like Bitcoin, and it's not bogged down by congested networks like Ethereum during peak usage. Instead, it uses the Ripple Protocol Consensus Algorithm, RPCA, allowing transactions to settle in just 3 to 5 seconds, with costs measured in fractions of a cent. This is why financial institutions, even some of Ripple's harshest critics, can't ignore its technical capabilities. And Ripple's not operating in isolation. Over the past decade, it has forged partnerships with more than 300 financial institutions worldwide, banks, payment providers, fintech firms, and even central banks experimenting with digital currencies. Countries like Bhutan and Palau have tapped Ripple for central bank digital currency, CBDC, pilots. Payment giants like SBI Holdings in Japan and remittance companies in the Middle East use Ripple's technology to move billions in value. But Ripple isn't just a tech provider. It's a company that plays the long game in building relationships with institutions. While many crypto projects market directly to retail investors, Ripple focuses on the top of the pyramid: financial infrastructure, regulatory compliance, and enterprise-grade adoption. In other words, the exact kind of positioning that a firm like BlackRock would pay attention to. And here's where it gets even more interesting. Ripple sits in a unique middle ground between crypto innovation and traditional finance. It's not as decentralized and anarchic as Bitcoin, but it's also not fully under the thumb of legacy systems. This hybrid nature could make it a perfect bridge for institutional investors looking to dip into digital assets without fully leaving their comfort zone. Despite being locked in a years-long legal battle with the US SEC, Ripple has continued to grow internationally, expanding its footprint in Asia, Europe, and Latin America. This resilience has not gone unnoticed. In fact, the very fight with regulators may have forced Ripple to refine its compliance playbook, making it even more attractive to large players who need regulatory clarity before they commit. So when you put it together, a global payment network, a tested blockchain, a growing list of enterprise partners, and a strategic position between old and new finance, you start to see why Ripple could easily pop up on the radar of the biggest asset manager in the world. Because to BlackRock, Ripple isn't just another crypto company. It's a potential infrastructure layer for the future of global money movement, a future they may want a seat at the table for, where the worlds collide. Now that we understand the scale of BlackRock and the mission of Ripple, the next question is obvious. Are these two financial forces really connected? And if so, how deep does that connection go? On the surface, there's no press release saying, BlackRock invests in Ripple, or BlackRock adopts XRP. These giants don't operate that directly, especially not when it comes to disruptive technologies. But in finance, influence often moves through layers, networks, intermediaries, and it's in those layers where the threads start to show. The first clue comes from shared partnerships and overlapping networks of influence. BlackRock's massive investment portfolio spans major banks, payment companies, and fintech innovators, many of which already work with Ripple. When BlackRock is a major shareholder in a bank that also happens to be piloting Ripple's technology, that's not a direct link, but it's an intersection of interests. The same is true for payment processors and remittance companies that count both BlackRock and Ripple among their allies. Then there's the institutional adoption trend. In recent years, BlackRock's CEO Larry Fink has shifted from calling Bitcoin an index of money laundering to openly endorsing blockchain as the future of finance. BlackRock has already dipped into the crypto waters, launching Bitcoin ETFs, exploring tokenization of assets, and experimenting with blockchain settlement systems. This shows a clear willingness to invest in infrastructure, not just speculative coins. Ripple fits squarely into that infrastructure narrative. Another potential touchpoint lies in custody and liquidity solutions. BlackRock's involvement in tokenized assets could easily align with Ripple's on-demand liquidity, ODL, network, a system that uses XRP to instantly bridge different fiat currencies for cross-border payments. If BlackRock were ever to tokenize large-scale assets and needed an efficient settlement rail for international transactions, Ripple's technology would be one of the few mature, battle-tested options available. And let's not overlook the quiet players, the venture capital firms, institutional funds, and strategic advisors that operate between Ripple and BlackRock. In some cases, the same firms that have stakes in Ripple's ecosystem also manage assets or advise funds connected to BlackRock. This doesn't mean a direct partnership, but it's how influence and familiarity build in the financial world, one overlapping relationship at a time. It's also worth noting that BlackRock thrives on anticipating market shifts before they happen. If they believe blockchain-based payment networks will become the backbone of global finance in the next decade, it would be logical for them to start positioning early, building relationships, testing infrastructure, and keeping an eye on key players like Ripple. They don't need to make a headline investment today. They just need to quietly set the chessboard so they're ready when the opportunity comes. Put simply, the BlackRock-Ripple connection may not be a handshake in public. It might be a slow, strategic dance in private. And in finance, that's often the more powerful kind of relationship. If BlackRock makes its move, let's imagine, for a moment, that all the whispers, overlaps, and quiet intersections between BlackRock and Ripple aren't just coincidence. Imagine BlackRock decides to formally step into Ripple's world, either through direct investment, partnership, or by integrating Ripple's technology into their own financial infrastructure. What happens next? The first impact would be instant credibility. While Ripple already has hundreds of institutional partners, having the largest asset manager in the world on board would send a shockwave through both traditional finance and crypto. BlackRock's involvement isn't just about money. It's about endorsement. It tells every bank, hedge fund, and government, "We've vetted this. It's safe. It's the future." That alone could trigger a cascade of adoption. Next comes the liquidity effect. BlackRock manages trillions, and even a small allocation toward Ripple or XRP would be enormous compared to current market volumes. Liquidity would surge, price volatility could stabilize, and XRP might transform from a speculative asset into a core piece of the global settlement puzzle. Suddenly, we're not just talking about retail traders swapping coins, we're talking about Ripple being part of the plumbing that moves billions every day. Then there's the tokenization boom. BlackRock has made no secret of its interest in tokenizing real-world assets, stocks, bonds, real estate, so they can be traded more efficiently. But tokenization only solves part of the problem. You still need a fast, reliable, cost-efficient network to move those tokens globally. Ripple's on-demand liquidity system, powered by XRP, could be that network. In this scenario, Ripple wouldn't just be helping move money, it could be helping move tokenized everything. The regulatory ripple effect would be equally significant. BlackRock has deep connections with policymakers worldwide. If they aligned with Ripple, they could use their influence to push for clearer regulations on XRP and blockchain payments, removing one of the biggest barriers to mainstream adoption. Suddenly, what's been a years-long battle with the SEC could shift into a global push for a defined, crypto-friendly framework. And perhaps the most important change would be the psychological shift. Right now, many traditional investors still see crypto as risky, volatile, and unproven. But if a trillion-dollar giant like BlackRock openly adopts Ripple's tech or holds XRP, that narrative changes overnight. The line between crypto and traditional finance begins to blur, and maybe even disappear entirely. This is why the idea of a BlackRock-Ripple connection is so powerful. It's not just about two companies doing business. It's about the merging of two worlds, the old guard of global finance and the new frontier of blockchain innovation. Together, they could redefine how value moves across the planet. The only question is this move already in motion? And if it is, will you be ready when the announcement finally comes? The clock is ticking. In finance, the biggest moves don't start with headlines. They start in quiet rooms behind closed doors, where strategies are mapped years before the public ever hears about them. If BlackRock and Ripple are moving toward each other, it won't be obvious until it is. And by the time it's front-page news, the early positioning will already be done. The question you have to ask yourself is, when the world's largest asset manager and one of crypto's most disruptive payment networks finally make their move, will you already be in the game or scrambling to catch up? Because in this market, hesitation is the most expensive trade you can make. So here's what you need to do next. Keep your eyes on every announcement, every quiet partnership, every shift in Ripple's institutional strategy. Watch how BlackRock positions itself in the tokenization and payment space. And don't just follow the news. Read between the lines. The connections are forming. The pieces are moving. The only question left is, will you?